Welcome. In today's video, I'm going to compare the economy of the United States with the economy of the European Union. If you'd like to stay more informed about my objective evaluations, please subscribe to my channel. Let's begin. First of all, my question is this: who really controls the world economy? America or Europe, a quiet but giant economic power? On one side, the throne of the dollar. On the other side, a massive economic bloc where dozens of countries are united under a single market. So who is actually stronger? Who is richer? Who controls the future? And the real question, can Europe truly catch up to America economically? Today we're going to talk about this together with numbers, real data, and statistics released by official institutions. Because most people only look at the surface. But behind the scenes, there is a much bigger story. Let's start from the very beginning. Why was the European Union established? Many people think it is only an economic union, but the story is actually much deeper. After World War II, Europe had turned into ruins. Cities had been destroyed. Industry had collapsed. Millions of people had lost their lives. And do you know what Europe's biggest fear was? Another war, especially between Germany and France. That is exactly why European countries first wanted to reduce the possibility of war by building economic ties. The logic was very simple. Countries that are economically dependent on each other do not want to go to war. What first began as cooperation through coal and steel gradually turned into a massive economic union. So the European Union was not created only for the economy, but was actually an economic peace project established against war. And today, it is one of the largest economic regions in the world. So who is the strongest in Europe economically? The answer here is very clear. The locomotive power is Germany, Europe's industrial giant. The power of machinery, the engine of exports, automotive, chemicals, heavy industry, engineering. For many years, the heart of the European economy has been Germany. So what made Germany this strong? First, exports. If you want to understand the economic power of a country, the first thing you look at is what it sells to the outside world. And Germany is truly very strong in this area. Its three main export categories are automobiles and vehicle parts, machinery and industrial equipment, chemical and pharmaceutical products. Just think about it. Machines, cars, factory systems, medical equipment used all over the world. Germany's mark is on a huge portion of them. As you know, made in Germany used to be a concept in itself. But why? Because Germany has been producing high value-added goods for years. It does not sell cheap products. It sells quality, technological, and expensive products. This is where its real strength comes from. You cannot become rich by selling phone cases. But if you sell industrial machines worth billions of dollars, everything changes. That is exactly what Germany did. America, on the other hand, followed a different model. America's strength grew more through technology, finance, consumer market, dollar dominance, capital markets. For example, just look at the tech giants. Apple Inc., Microsoft, Nvidia, Amazon. The market values of these companies alone can exceed the total economies of many European countries. And this is exactly where the main difference appears. Europe grew through production and industry. America grew through technology, finance, and the power of the dollar. What about per capita income? This is very critical, because the total economy can be large, but what really matters is what goes into people's pockets. Per capita national income in America is significantly above the European average. In the 2026 projections, U.S. growth is expected to remain around 2.8%. The Eurozone, on the other hand, is around 1.3%, so America is still growing faster. Do you know what that means? Capital increases faster, companies grow faster, markets are priced faster, innovation happens faster, and this widens the per capita income gap. Now let me ask you a critical question. Why do you think the world's central banks still hold the most dollars in their reserves? Because America is not just a large economy, it is also the center of the global financial system. The US dollar is still the world's primary reserve currency. This is an incredible power, because a large part of global trade runs through the dollar. Oil, dollar, international borrowing, dollar. Central bank reserves? Mostly dollars. This gives America a huge advantage. Europe does have an important strength with the euro, yes. The euro is the world's second largest reserve currency. But getting close to the dollar is still very difficult. That is why, even if it may seem theoretically possible for Europe to surpass America economically, in practice it is extremely difficult. Because the issue is not just GDP, the real issue is controlling the monetary system. What about inflation? In recent years, both America and Europe have experienced serious waves of inflation, but America reacted faster here. Interest rate hikes, liquidity tightening, market interventions. According to the latest estimates, inflation in the US is expected to decline to around 2.2% by the end of 2026. On the Eurozone side, the recovery is slower. Especially energy prices affected Europe much more, because Europe is dependent on external energy sources. America, on the other hand, is in a much more advantageous position when it comes to energy, and this directly affects costs. For industry, energy means profit margins. Profit margins mean growth. That is why European industry sometimes comes under pressure against America. Now let's come to the highly anticipated question. Is Europe acting in line with America's interests? Economically, the answer is a bit complicated because they are rivals, but at the same time allies. Especially in terms of NATO, trade, finance, and geopolitical partnership, there are very strong ties. But economic competition is also very fierce. For example, technology investments. America is far ahead here. Artificial intelligence, chip technology, software, data centers. In these areas, US companies are world leaders. Europe stands out more with industry, engineering, and regulatory strength. Especially in AI investments, it seems very difficult for Europe to keep up with America's speed. Official growth data also supports this. Are there trade wars? Not outright hostility, but serious tensions have occurred from time to time, especially in areas such as automotive tariffs, steel and aluminum taxes, technology regulations, data privacy rules. So they are friends but not complete friends. Rivals but not enemies either. The most accurate definition is strategic economic allies and at the same time strong competitors. In fact, throughout this video, you may have realized something. Comparing Europe and America only by GDP figures is very superficial, because America's real strength is not just the size of its economy, system power, dollar power, stock market power, technology power, domestic consumer market. Just think about it. America's domestic market alone is enormous, a consumer base of approximately 340 million people with high spending power. This reduces excessive dependence on foreign trade. In Europe, especially Germany, is export-oriented, and this can sometimes create fragility. So if external demand falls, Europe is affected more. America, on the other hand, can sustain growth more comfortably through its own domestic consumption. And that is exactly why. For now, the throne of economic power still belongs to America. And to be honest, it does not seem very likely that Europe can fully catch up to America economically in the short term. Because the difference is not just money, ecosystem gap, technology gap, capital market gap, reserve currency gap, and most importantly, leadership gap in the industries of the future. So, can America's power really last forever? Or is Europe quietly preparing for a major transformation? Especially Germany's new investment plans and Europe's technology push, that is where the game could change. Now we have reached the truly critical point. A moment ago, we saw that, for today, economic power is still in America's hands. But I want to ask you this. Is this power really permanent? Will America always remain at the top? Or is Europe preparing a slow but solid comeback? Because what you see on the surface and what is happening behind the scenes are not the same thing. Europe often moves slowly, but it does not move without a plan. America is fast, but sometimes it grows too aggressively, and this difference may determine the future. Now look, what is one of the most criticized aspects of Europe? Bureaucracy, regulations, a slow decision-making mechanism. Do you want to start a startup? In Europe, the process is long. In America, much faster. That is why almost all of the world's biggest technology companies come from America. But there is one detail that most people miss here. Instead of choosing fast growth, Europe prefers controlled growth. For example, data security. Europe has one of the strictest systems in the world in this regard. With regulations like GDPR, it places serious limits on companies. In America, companies are much freer. So what does this mean? In the short term, America wins. But in the long term, could Europe be building a more sustainable model? Now let's look at the energy issue, because this was Europe's greatest weakness. Especially in recent years, energy crises seriously shook Europe. Industrial production was affected, costs increased, inflation rose. But Europe did not sit still. It accelerated renewable energy investments tremendously. Solar, wind, hydrogen, carbon-neutral targets. Europe is currently one of the regions investing the most in green energy in the world. Do you know what that means? Long-term energy independence and lower-cost production. America may have the energy advantage today, but Europe may be building the energy system of the future, and this could change the rules of the game. Now let's move on to a tougher topic, debt. Do you know what one of America's biggest risks is? Massive public debt, trillions of dollars, increasing every year. Even interest payments alone are a huge burden. So is this sustainable? In the short term, yes, because the dollar is strong, because the world still trusts America. But in the long term, that is a question mark. There is also debt on the European side. But the system is more disciplined. Especially countries like Germany have been very strict about fiscal discipline for many years. So America is playing a riskier game. Europe, on the other hand, is more controlled. Now let me ask you something. If you were an investor, which one would you choose? A fast-growing but risky system, or a slower but more stable one? That is exactly the question global investors are trying to answer. Now let's come to gold reserves. This topic is rarely discussed, but it is very critical, because gold is insurance during times of crisis. European countries, especially Germany, have serious gold reserves. These reserves have been protected for years. America also has one of the largest gold reserves in the world. But here is the difference. America trusts its system. Europe, in addition to the system, places more importance on physical security, and this may provide Europe with a different advantage in crisis scenarios. Now let's also look at what people think, because the economy is not just numbers, it is perception. When you look at economic public opinion surveys conducted in America, you see something interesting. Many Americans believe their country is economically strong, but at the same time, they are concerned that the system may be fragile. So on one hand, there is confidence. On the other hand, there is doubt. In Europe, the situation is slightly different. People know that growth is slow, but they believe the system is safer. So here too, there is a mindset difference. America, we are growing, but there is risk. Europe, we are slower, but more stable. Now let's come to the most critical question. Can Europe really catch up to America economically? To be honest, in the short term, no. Even in the medium term, it is very difficult. Because America's advantages are huge. The global power of the dollar giant technology companies, strong capital markets, high consumption, fast innovation. It is not possible to catch these in a short period of time. But can things change in the long term? Yes, especially in three critical areas. First, green energy transformation. Second, the evolution of industrial technologies. Third, regulatory power. Europe is making serious investments in these three areas. And remember, the world economy is changing from an oil economy to a digital and sustainable economy. In this transition, the rules of the game will be rewritten, and Europe may have an advantage here. But still, who is today's winner? Clearly, America, the strongest economic country in the world, not just by GDP, but by system power, financial dominance, technology leadership, and perhaps most importantly, because the rest of the world is still dependent on it. Is Europe strong? Yes, very strong. But is it on the same level as America? Not yet. And this gap does not seem likely to close easily. But the game is not over, because the economy is not a race. It is a process. And in this process, Balances can change at any moment. Maybe 10 years from now, we will come back to this video and say, that was when everything started to change. Or, nothing changed, America is still on top. Which one do you think it will be? That is the real question.